Hey there, crypto comrades. Remember when everyone thought Bitcoin was going to the moon? Well, turns out even rockets have their bumpy days. April 2025 has been a wild ride for crypto, with more dips than a roller coaster at a theme park. But hey, who doesn't love a little adrenaline rush, right? Before you cash out your Doge for $1, don't do that by the way, let's break down what's causing all this crypto craziness. The truth is, the crypto market is like that friend who can't decide what they want for dinner. One minute they're all about Bitcoin, the next they're eyeing up Ethereum. This volatility can be scary, but it also creates opportunities for savvy investors. So hold on to your hats, folks, because we're about to dive into the wild world of crypto in April 2025. So, what's got the crypto market doing the jitterbug? Well, it's a cocktail of three main ingredients: regulatory shifts, institutional acquisitions, and you guessed it, the US government. First up, we've got regulations. Governments around the world are finally realizing that crypto isn't just for tech nerds and shady online marketplaces anymore. They're scrambling to figure out how to regulate this digital Wild West, and that uncertainty is making investors a little jittery. Then, there are the big players like traditional financial institutions who are finally dipping their toes into the crypto pool. These institutional acquisitions can cause big waves in the market, especially when it comes to smaller coins. And of course, we can't forget about good old Uncle Sam. The US government's stance on crypto has been about as clear as mud, but their recent moves have definitely shaken things up. More on that later. Remember when the US government was all about cracking down on crypto? Well, it seems like they've had a change of heart, or at least a change in strategy. The Justice Department recently disbanded its National Cryptocurrency Enforcement Team, which sounds scary, but it might actually be good news for crypto. Instead of focusing on crypto itself, they're now more interested in going after criminals who use crypto for illegal activities. Think drug trafficking, money laundering, the usual suspects. This shift in focus suggests that the US government might be warming up to the idea of crypto, especially with President Trump's recent executive order promoting open blockchain access. Could this be the start of a beautiful friendship? Only time will tell. Speaking of big moves, Ripple, the company behind the XRP cryptocurrency, just made a splash by acquiring Hidden Road, a prime brokerage firm, for a cool $1.25 billion. That's a lot of digital dough. This acquisition is a big deal for a couple of reasons. First, it shows that Ripple is serious about becoming a major player in the world of decentralized finance, or DeFi. Second, it could give XRP a major boost in legitimacy and adoption, especially among institutional investors. Is XRP about to take center stage? Don't count it out just yet. Hold on to your hard drives, folks, because this next one is a doozy. President Trump recently dropped a bombshell by proposing a strategic Bitcoin reserve and digital asset stockpile. That's right, the United States government might start hoarding Bitcoin like it's going out of style. But it's not just Bitcoin they're after. The proposed stockpile would also include other major cryptocurrencies like Ethereum, Solana, Cardano, and yes, even XRP. The idea is to bolster the U.S. economic power and technological leadership in the digital age. Could this be the catalyst that finally pushes crypto into the mainstream? It's definitely a possibility. Okay, let's address the elephant in the room. When will this crypto dip finally end? Well, if history is any indication, we might be in for a wild ride in the coming months. Analysts are predicting a potential market pump, driven by a perfect storm of factors. We've got institutional money pouring in, a more crypto-friendly US government, and the aftermath of the Bitcoin halving, which historically leads to price surges. Some even predict that Bitcoin could skyrocket to $490,000 if the bull patterns of the past repeat themselves. But remember, folks, this is crypto we're talking about. Anything is possible, and past performance is never a guarantee of future results. So, what's a savvy crypto investor to do in these uncertain times? First of all, don't panic. This isn't the first time the crypto market has taken a tumble, and it certainly won't be the last. Instead of freaking out, focus on making smart investment decisions. Here's a quick rundown of what you should be doing. 1. Accumulate strong assets. Bitcoin and Ethereum are still the big dogs on the block, but don't be afraid to diversify into other promising altcoins with real-world use cases. 2. Keep some cash on hand. This will allow you to take advantage of dips in the market and buy low. 3. Stay informed. Keep an eye on regulatory news, especially from the US and the EU. 4. Don't be afraid to use technology. AI, automation, and algorithmic trading tools can help you make smarter investment decisions. Remember folks, investing in crypto is a marathon, not a sprint. Stay informed, stay disciplined, and don't put all your eggs in one basket, digital or otherwise. So, there you have it folks. The crypto market in April 2025 is a whirlwind of volatility, uncertainty, and opportunity. Is it a wild ride? Absolutely. But is it a ride worth taking? That's up to you to decide. One thing's for sure. Crypto is here to stay. It's changing the world as we know it, and those who are brave enough to ride the waves stand to reap the rewards. Just remember to buckle up, because it's going to be a bumpy ride.